Hello, this is Solomon Davis, Right Side Trader. Today is April 2nd, 2023, and this is a review of a trade that I placed with some guys. I was trying to show them about trading options, and one of the trades that we did was an iron condor. So one of them was asking, "What did you see? What did you do?" They're new traders. They didn't understand they didn't really catch everything that I was doing at the time, and I told them just ask questions you know, and the thing is really what he's kind of asking is just for a complete trade what I usually do is a complete trade review. I won't go into too many details here. If you want more details, and I'll just kind of put it in the comments. You have questions about a certain part of it that I'm doing, just kind of let me know, and I'll try to make a video about that, or maybe I'll comment on that. But again, this is all for educational purposes only. No trade recommendations here. Just my view and my point of how I actually go about trading the market, and how I look at trying to make money in the market. And also, I will show you this one trade here that we did, and not a lot of money, but that's the other thing about me. I'm not looking to hit home runs when I'm trading. I'm looking to pick up I like to be that taxi. If you ever heard that thing about the taxi driver that a couple taxi drivers. One of them, he liked doing the little short routes back and forth, up and down the street. And then the other taxi driver, like trying to catch that toll to the airport. In the end, I guess the one taxi driver that was making the short trips ended up really making the money and staying in the game longer. The taxi driver that was looking to make those trips to the airport, those long trips, he get maybe one or two of those a week. When it comes, I'm just really into trading, but that's not really enough to sustain your lifestyle, your living, and all. When you're doing like that, just learn to see. I like seeing the market in a way where I can pick up what I used to say dimes. Now it's like 20 cents, 25 cents, 50 cents trade, and be good with those. And that's what I'm going to be showing you here now. So let's take a quick look at here, and let's look at one of these 15 cents trades and all. So let me jump to the charts and what we were trading. We was trading this thing here in RG. How I went about finding this, it was a FinViz search. On that particular day, on this Sunday night, it was on the 26th, actually. It was that Sunday night before that, actually, when the trade placed. I went out to FinViz. I showed them on FinViz. We did a search for stocks that were on what I call it on the move. And while we were searching for those stocks that were on the move and all, this was one of the ones that came up. It was an energy stock, which I was kind of okay. Energy was being hot at the time, and the other one that came up was Beyond. It was a list of them, but the two that we decided to select was this energy stock and Beyond Meat. And I guess the big question was for him, why did we select this one? And this one, I didn't expect it to. What I'm looking at something that's going to be, in the middle of a range that it is creating. This stock, as you can see, is kind of bouncing in a range here. I see that like right away. I've been doing this long enough. When I see a stock in a range, it's a certain style that I want to trade. Condors, that's one of those styles, and all. And then if it's just happen to be near the middle of that range, I want to sell something I want to sell some call spreads on the top, and I want to sell some put spreads on the bottom. So that's what that's what I was seeing at the time, and this is where we actually entered on that particular day. And the strikes that we ended up selecting on the call side was the 36 that we actually sold. And you can see the date we sold April ones. April ones probably was about 40 plus days out at the time, so that was almost over. It was over 2 months, as you can see. We did this trade back in February when it was actually open. The options that I select was a 21st of April expiration, and all. I selected a 36 and a 37 call spread. You're going to be selling the lower strike and buying it back at the higher strike. So that's $1. They had dollar width strikes, which was another good thing that I liked about this one. So I was able to sell a call above, and again, where I'm selling it at. That's the thing. I want to sell above the range that it's in. I want to have my risk on at that point. So that was why I selected the particular strikes on the call side for this particular trade. Then we were looking at the put side. The put side ended up selling a 32 and a 31. A 32, I'm a bullish trader, so I'm usually a little bit, again, that's when your bias comes into it. Even though we're seeing a bearish looking pattern here on these two candles here and all, this green candle and this red candle, and this line is just representing the day that we actually entered the trade. I'm still, me, bullish mindset as I am, I'm still being a little bit aggressive saying, okay, this thing is not going to drop. This green candle back here is going to keep this thing up. And this little support area right here is going to really help it. And because this, I'm going into that because the other thing, so I selected the 32 and the 31. So I sold the 32 and I brought it back at 31 and on this particular trade. So I was like, so now the whole ideal of an iron condor is that the market stays between the range and the theta decay, works for you, time works for you on these particular trades. So the trade ended up placing the following day for 45 cents, and the trade ended up placing for 45 cents credit the next day, and we were in that trade. I told the guys, I think I might have put one video out, a short video, letting them know that we had entered the trade for the credit that we was expecting to get, and all that it was giving us on the weekend. I kind of probably nudged it one direction or the other. Sometimes I do that, and all. So from then on, all we were doing is watching and trying to manage the trade. So this is how it went. It ended up going like this, going like this, going like this, going like this. And as you can see, at this point, it had triggered. This alert had went off, and I put it back on after this alert went off. And when this alert went off on this particular day, this was the 13th of March last month. That was like on a Thursday. That was on a Thursday. So they didn't know anything about it at that time. If they was watching it, they would have saw it. But I don't think anybody contacted me again. They usually don't have a clue what's going on, and I'm trying to learn. So me, I'm expecting a bounce. I see this is where the market bounced, so I don't do anything. I wait until the end of the day, and I see what happens. Then I go wait and let it go into the next day. Ideally, I would have rolled this trade and all, or if I was trading it live, I would have been trading one contract. I've been willing to maybe take on shares at that time and then start selling calls on that one side of the trade. End up closing the call side because again, the call side, whatever credit we was collected on there, we probably would have been able to close it for a penny or for a nickel or less, and collecting 50% of that or more, whatever was collected on that side. The total collected on this trade, like I said, was 45 cents. I should have put maybe numbers on here, what was collected on the call side and what was collected on the put side. So I didn't do anything at this time. I just kind of watched it, and it ended up coming down, hitting it again, and it gave me a bullish pattern here. That was a Thursday. I think this was Friday, and then this was, no, maybe that was Thursday. Let me see. I can see where I can see the weekend. This 10th, 13th. So this was a Monday. Tuesday, Wednesday, Thursday, Friday. So I like waiting until the end of the week. I had this bullish looking pattern here, and this thing hung out down here for a few days. So I was kind of watching it, and then once I got this bullish pattern Friday, and I felt, I'm one who hate carrying things over the weekend, but I did. And then come Monday, boom, this thing shot up. So again, we was okay back in the clear on this, and then it came down there again like that. And that was the thing. This was on the we have our calls on the weekend, and that weekend we was looking at this thing down here again. The trade was profitable because time had passed by. We tried to, like I said before, I wanted to close the call side, and I attempted to close the call side at this time, But the options, again, this is when it comes to trading options, you have to be aware of your bid and ask prices, how things are actually trading on those particular option chains and stuff that you're actually trading. And on this particular one, they were kind of thin, and the bids and asks were crazy. So in order for us to close our call side, which you would think would be easy, or would have been an easy thing, it was trying to make us pay to get out of our trade. So I say, guys, this thing is not allowing us to get out of the trade at this time, and we can set it up. And I say, but we probably can close the full trade, maybe not for our 20 cents, half of the commissions that we had collected. Maybe we can get out of it for 15 cents or 30 cents or something. I said 30 cents. We can maybe get out for a smaller profit, close it for 30 cents, 25 cents. I want to make at least 15 cents on the trade, and that's what I ended up getting. So I asked them, okay, guys, what you want to do? Because I said we have a bullish looking pattern. This thing may bounce, but it may go back down and give us a more headache, and we'll be in this trade for a little bit longer. We didn't know that this was going to happen the next day, but we ended up getting out of the trade the next day, So the next day, it did trade back to the upside. It obeyed its bullish pattern that we see down here, and I was able to close the trade for 15 cents. 15 cents on this particular trade. That's $15 per contract, and also it ended up being $15 per contract, and we had over 10 contracts, or had 10 contracts on the trade. So I ended up making $150 on the trade. But it took a whole it took a whole month to make that $150 on that trade. But if you got 20 of these out there, 10 of these out there, and you're doing that, every week, it's not bad. But you gotta, So a little bit. I'll go ahead and let you. That was pretty much the trade. And I'll show you the numbers over here in the account. This is where we actually, down here is where we actually, this is in a simulated account. Practice. That's what I'm trying to get them to do. Practice, where you can see these things, see how these things work, see the problems that you do run into with these trades, and the problems that you can run into with these particular type trades, and how you're going to try to manage them and see if you can manage them, and what should you do, when things are not working quite right. First of all, just like I said, the initial credit was 15 cents. We ended up closing it on the 27th for 30 cents. So the difference between these two numbers is the credit that we actually made, which is that 15 cents. So 45 cents minus 30 cents equals 15 cents. That's the total credit that we ended up with this trade. Here you can see where the trade was actually filled. It took this is when the trade was actually placed. As you can see, we did. Again, that's the other thing that I'm trying to get them to understand. You can do all your homework on the weekend. You can set up your trades to be executed come Monday morning, and that's what happened with this particular trade here. It was actually execution time. This is not correct execution time. This is when we actually, I don't know what time, place. I would like to see execution time on the trade. This is when we actually placed the trade. It was on Saturday, credit and all, and it actually was filled for that credit. Then on the 27th, it's actually again on the 27th. I'm thinking that was another Sunday that we actually placed the trade, and this is what it was filled for. These are that rejection that we was actually getting trying to close the call side. As you can see, these are calls. And I didn't really understand what was going on at the time. And then I realized, looking at the bid and the ask on those call contracts, it was trying to they was just what I call messed up. They were where we was trying to get a debit and all, and it was giving us a much larger debit, or wouldn't even let it. It was saying it wasn't even acceptable or something like. There was no bids or something on one of them, and all. And when you run into that, I tell people all the time, if you see something out there with 0 bids on it, that means there's nobody out there willing to buy whatever you want to sell. And you have to be very aware of that when you're trading options. And that gets a lot of people in trouble. They get good trades, they don't work out, and they end up just throwing money away. And that happens a lot when you're trading things that are not highly liquid, as they call it, where you got a lot of activity, a lot of open interest, and being traded a lot. And that's why myself, I like selling things. Number one, I don't have to worry about closing the trade long as I'm right. I trade positions small enough where, especially on the put side, where I can actually end up buying. I don't mind buying the stock, it's a company that I don't mind buying. And on the call side, if I end up short something, again, it's one where I may have already purchased the stock and just doing some spread trades and selling some credits, getting some credits around it. I do that a lot. So that's really what I want to kind of share with you guys. Let's take a quick look at the options on this particular thing, and you'll see what I'm talking about. As you can see, the strikes that we was trying to trade here. Let me go back here. The strikes that we were trying to trade here. Let me go back. I got to go back to my picture and my mind. Wrong one. And yes, I was doing it. I'm doing it in an IRA account. That's the other thing that I talked to them about selecting a broker. Make sure you find a broker that will allow you to do what you want to do. And that's why, again, you need to be, a lot of times you need to educate yourself in order to be able to do that, though, too. And I'm bouncing all over the place right now, so let me go back over here. The call right here. The call 3637, 3132. Let me get back over here. Oh, what did I do over here? I'm such a bonehead at times. 3132. 3132. So right here, as you can see, you think you should be able to close this trade here, no problem. That on the put side, no problem. But on the call side is where we was having a problem, right? It was 3637. And as you can, this is what was happening. A week ago, we had these zero bids here. So it was nobody there bidding, at the time. And we're doing this on the weekend. And so trying to actually put the order in, they kind of let you, the bro on the platform, it kind of lets you know there's nobody to trade with. It gives you a message somewhat like that. Let me see if it'll do it now. If I try to, it probably let me see if I try to sell a vertical, what it'll do. It gives me a 7-cent credit. Let me see if I try to buy that vertical. What it'll do? Buy vertical. It gives me it'll charge me 8 cents for it, but let me delete. Go here and try to buy a vertical. It says zero cost for that, but if I go to a confirm and send, break even price, maximum loss, 0, but it's not gonna let me execute this trade in the market like that. And give me a free trade, just charging me commission. Your broker may do that; they'll take their money. Who knows? But it was strange, the message that we was getting at the time, when we was trying to do these trades and stuff. And the other thing that I was trying to do, one other thing that I was trying to do was trying to roll the whole trade out, and we was running into problems like that too. But we went through those exercises on the call to show them what things look like, how they pop up, and the different options that we have. But that's it. That's all I really want to share. Again, let me sum up what I just went over. I got started rambling there at the end. What the trade was, the NRG. We ended up trading a 21 April 23 trade. We placed it on February 26th. We ended up receiving a 45-cent credit, and we ended up closing it. We wanted to close it looking to close it for 20 cents. We reviewed and managed the trade on the 3rd, and we couldn't do anything at that time. Well, I looked at it and I couldn't do anything at that time. I decided not to do anything. I wanted to close the call side, but it wouldn't let me close the call side on the 26th. So the group decided, let's close that thing for 30 cents if we can close it for 30 cents. So I was able to close the trade on the 27th. That's March 27th, for 30 cents, and we ended up getting a total credit of 15 cents, which equals to $150 on we made on the trade in 30 days. Doesn't sound like a lot, but when you're getting started, it's a good way to get started, at least making some money on your first trade that you actually place out there. And that's all I really want to share. This is Solomon, Right Side Trader. Hope this was helpful. If you have any comments, I want more details about something, I need me to explain something, if I've mumbled on about something that kind of confused you, just let me know, and I'll place another trade. I'll dig into a little bit more details of that area. Talk to you later. Time to start my other call. Bye.